So let's talk about market strategy. So not only does blockchain lower the cost, it lowers the barriers to entry. And that changes everything about how companies might want to enter the market with their new blockchain-enabled product or service. So traditional barriers to entry included economies of scale. In other words, as you got more users, the cost went down. High capital requirements, just securing product ownership, intellectual property, having to fight with big players who might keep people out of the market, and just access to distribution. It's really hard to get a foothold. That is the traditional barriers to entry. Well, with blockchain, we eliminate a lot of that. And here's a good example of that. Manufacturing as a service. So think about a company, an industry that has tremendous barriers to entry. Manufacturing, high capital costs, right? All of the above that I mentioned. Access to contracts, distributions, people, and access to investment. Well, with blockchain, even small players, manufacturers can speed up the process of manufacturing by using a worldwide production protocol. We can decentralize production with blockchain. We can sell products in a decentralized network manner without too much fear of having to fight with the larger players. They can create pay-as-you-go manufacturing orders or just-in-time systems, and they can process orders much more quickly. We can integrate smart contracts into their devices and automate their supply chain and reduce that huge cost that would have been a great barrier to entry. So the conclusion is that we can manufacture much cheaper than we used to be able to with blockchain and distributed networks. And that gets rid of a barrier to entry, providing a big opportunity for new competitors in manufacturing. You know, I don't think it would be complete to talk about the business case and the economic case for blockchain without mentioning the design principles of Tapscott, who wrote Blockchain Revolution. And the 7 design principles of a blockchain economy are networked integrity, according to Tapscott. In other words, every interaction is recorded. Distributed power, nobody monopolizes control or monopolizes access to data. Value as incentive, so everybody has aligned incentives. Security, a very secure system. Privacy, people have control of their idea. Rights are preserved, the rights are clear and enforceable, and inclusion, in that everybody has the ability to participate in the community. Those are the design principles of the blockchain economy. You can read more about that in Tapscott's book. So what is the strategic business value in blockchain? McKinsey has 3 insights from its latest report. So number 1, it does not have to be a disintermediator to generate value. And because of that, we're seeing more permissioned rather than permissionless commercial applications. In other words, permissioned looks more like a system with an intermediary than permissionless. And blockchain does not have to be a complete disintermediary. It does not have to be permissionless. It does not have to have an unlimited, free, and open community. And we see that in industry now. In fact, most of the applications you see built on the blockchain are permissioned. So they're not complete disintermediators. Blockchain short-term value is going to be in reducing cost before they transform business models. And I think I've shown you some examples of that. That's why the big players and big companies, the big industry, dominant players are getting into blockchain to reduce costs. And according to McKinsey, they believed as of June 2018 that it was still 3 to 5 years away from feasibility at scale. Because of the difficulty of resolving this idea of co-opetition. In other words, we have to get a lot of players to cooperate. A lot of competitors have to cooperate in order to establish standards. We see that in lots and lots of industries. We also see that in blockchain too. For example, they're going to have to establish on a common platform. So how do companies, what approaches do companies take in their blockchain strategies? So there's several questions that a company is going to have to ask if it's going into this business. Number 1, where to compete, meaning in which applications. And they're going to have to identify their value by really assessing their impact at a granular level and focusing on the pain points that their use cases can address. Number 2, how do they optimize? So what is their strategy to establish their market position? considering the market, the ability that they have to influence the market, and standardization and regulatory barriers. This has always been a problem with companies, especially the sort of disruptive companies that I deal with in Silicon Valley. They go into the market, they have a better mousetrap, and assume because of that they're going to dominate the market, and they come to find out that the key parties just aren't that interested in the fact that they have a better mousetrap. We've seen that in lots of industries, medical, especially agriculture, and you could probably point to that in almost every well-established industry with lots of dominant players. It's just very hard to move that needle. Regulatory barriers. Again, there may be a requirement for regulatory approvals in business. That is something that a blockchain system is going to have to be tailored to. We see that very much so in securities. So the optimal strategy is going to depend on market position and the ability to influence standards of regulation, those two factors. And McKinsey has come up with a really kind of interesting sort of graphic here as to for how to categorize where a company is on this grid based on these two very important factors, market position and their ability to influence standards. So for example, the company might be a leader, right? It might have a very high market dominance and a very low regulatory barrier, and that makes them a leader. If they're a leader, their strategy ought to be to act now to establish the industrial standard and focus on the use cases with the highest value and network effect. Similarly, if they have market dominance but a high regulatory barrier, well then that's what we call a convener, and they ought to be building alliances to shape the blockchain solutions and focusing on high impact use cases just like the leaders. Now what if you're at the bottom end of that? What if you have low market dominance like most of my startups? If you have low market dominance and low regulation, that company's strategy ought to be as an attacker. It ought to be disrupting or focusing on disrupting the use cases. On the other hand, if there's high regulatory or standards barriers, they're probably best off being a follower and just be prepared to move to adopt to the emerging standard and create the product based on that standard and focus on testing use cases. Really good graphic, is really a helpful tool for a startup company in blockchain deciding what their strategy ought to be and what they ought to be going